So, good afternoon everyone. My name is Irene Cunanan and I'm going to report the last topics under the chapter 4, which is the analysis of financial statements. First, these are the topics that are assigned to me. First is the uses and limitation of ratio, Dupont equation, Altman z-score, and using financial ratios to assess performance. So these are the list of references. First is Boundless, no date, Boundless Finance, retrieved March 11, 2020 from courses.lumenlearning.com. Next is Dupont Analysis, no date, retrieved March 11, 2020 from investinganswers.com. Next is Ratio Analysis, Meaning, Advantages, and Limitations Accounting, published on 2015, October 26, retrieved March 11, 2020 from yourarticlelibrary.com. So fourth is, the author is Belly A, published on 2019, September 25, Altman z-score model guide examples, retrieved March 11, 2020 from www.cleverism.com. So for the fifth is, the author is Basso C, published on the 2019, February 11, How to Compare Financial Ratios to Industry Average, retrieved March 11, 2020 from bizfluent.com. And for the last is the author Hayes A, published on 2020, February 5, Trend Analysis, retrieved March 11, 2020 from trendanalysis.asp. So these are the list objectives or goals of this lesson. First is to be able to know the uses and limitations of ratios, to determine the Dupont equation and Altman z-score, and last is to analyze the uses of financial ratios to assess performance. So for our first topic, which is uses and limitations of ratios, ratio analysis is widely used as a powerful tool of financial statement analysis. It helps various interested parties to make an evaluation of a firm's performance. So these are the list of principal uses of ratio. First is planning and forecasting. In planning and forecasting, the trend in cost, sales, profits, and other facts can be known by computing ratios of relevant accounting figures of last few years. This trend analysis helps the ratios to be able to know the current performance and how to plan and forecast its business. So next is budgeting. From the word itself, budget, it is an estimate of future activities on the basis of past experiences. In budgeting, it will help you and your company to assess or to estimate the expenses that you need to lessen. So next is control of performance and cost. Next is under this, the ratio may also be used for control performances of the different divisions of departments of an undertaking, as well as the control of cost. So in control of performance and cost, in this you can help the company by controlling the performances of other or various previous years and the present years, and how to manage your cost and expenses. So for the fourth is the indications of liquidity position, which is ratio analysis helps to assess the liquidity position in short-term debt paying, and in this, liquidity ratios indicates the ability of a firm to pay and help the crediting analysis by banks, creditors, and other suppliers of short-term loans. So for the last uses of ratios is aid to decision making. Ratio analysis helps to take actions and decisions like whether to supply goods on credit to a firm or whether bank loans will be made available. So for the last is the limitations of ratios. In limitations of ratios, first is limitations of financial statements. Sometimes financial statement suffers from a number of limitations and may affect the quality of ratio analysis. Historical information. In historical information, financial statements provide historical information so that they do not reflect on the past experiences but for the present. So, in historical informations, it will not help you to predict the future if you always look for the past. So next is window dressing. Window dressing means showing the financial statements in such a way to a better position than what actually it is. So these techniques are employed by firms to make their financial statement better than they really are. So next is seasonal factors financial data. In here, the proper care must be taken when interpreting accounting ratios calculated for seasonal business. So examples of seasonal business are when Valentine's Day will happen, so the demand of flowers, chocolates, and other sweet materials are in high demand. So for our next topic, which is the Dupont equation. So Dupont equation is an expression breaks return on equity or ROE down into three parts, which are the profit margin, asset turnover, equity multiplier, or leverage. In profit margin, it shows the operating efficiency, while the asset turnover shows the use of asset use efficiency, while the equity or the leverage shows how much leverage is being used. So, Dupont equation is developed by Donald Sohn Brown at the Dupont Corporation in 1920s. Our formula in Dupont equation, profit margin will be multiplied by asset turnover and equity multiplier or leverage. It is stated it is like net income over sales times sales over total asset times total asset over total common equity or shareholders' equity. So for our example here, company XY balance sheet for current year. So in current year, the total asset of XYZ company has $25. So in shareholders' equity, it has $5,000. So in company XYZ income statement for the current year, the sales is $10,000 and the net income is $2,000. So using the Dupont equation, the ROE or Dupont equation, we will use the profit margin times turnover, asset turnover times equity multiplier or leverage. So, net income over sales times sales over total asset times total asset over total equity. So, in net income, we will look in the income statement of company of XYZ. The net income of XYZ is 2,000. It will be divided by the sales, which is 10,000. So, 2,000 divided by 10,000. So, for the next one is sales over total assets. So, in sales, it is $10,000 over the total asset that we will look in the balance sheet of company XYZ, which is $25,000. So, 10,000 over $25,000 is 0.40. So, for the last is total asset over total equity. So, the total asset is $25 and the total equity is, or shareholders' equity is $5,000. So, $25,000 divided by 5,000 is 5. So, we will multiply the answer of this formula, each formula, and the answer will be the ROE or Dupont equation. So, the answer will become 0.40 or 40%. They are considered as justified and solid investment when the percent is 12% to 14%, they are too high to risk to invest. While when it is more than 20, they are called as solid investment and considered justified. So for a third topic, which is the Altman Z-score. So Altman Z-score is a formula of 5 basic financial ratios to help to determine the financial health of a company. It is developed by Edward Altman in 1968, and he was a NYU Stern finance professor. So in this formula was picked up by those who wanted to know the profitability of their investment. So you can see here whether your company is gaining or not by knowing the bankruptcy, like that. So there are a lot of formula of using this Altman Z-score. So the first is Altman Z-score for manufacturing companies. In manufacturing companies, the Altman Z-score will be 1.2 times A plus 1.4 times B, 3.3 times C, plus 0.6 times D, plus 0.999 times E, or wherein the A, B, C, D, E is this. So these are the formula of A, B, C, D, and E. They are all different. First is A, working capital over total asset. Letter B, retained earnings over total asset. Letter C, earnings before interest and tax over total assets. For letter D, market value of equity over total liabilities. And for the last is E, sales over total assets. So before we proceed to our example in Altman Z-score for manufacturing companies, the uses of Altman Z-score is to predict the chances or the possibilities of a company that leads to bankruptcy. So, in example problem, Belta manufacturers in China produce car engines that they have been in business for almost 20 years. They have been profitable enough to employ more staff and increase their production but with a recent loan to take facility automation, investors want to know how the company is doing. So, their total assets are worth $3,500,000 while they have a working capital of $4,200,000. Their liabilities stand at $5 million while the retained earnings amount to $800. Earnings before interest and tax come to $6,500,000. Sales totals to $8,300,000, while the market value of equity is $7 million. So using the formula in the Altman Z-score of manufacturing companies, we will use the ABCDE formula in getting the Altman Z-score. So first is 1.2 times A. So we know that A is equals to working capital over total assets. So the working capital here is 4,200,000 over the total asset, which is 3,500,000. So the answer of the quotient of this will be multiplied by 1.2 for letter A. So next is for letter B. So letter B is retained earnings over total assets. So the retained earnings is amount to 800,000 over the total assets, which is 3,500,000. So the quotient of this will be multiplied by 1.4 so that the answer will be letter B for a while. Next is for letter C. So we know that letter C is earnings before interest and tax. So the earnings before interest and tax is 6,500,000 will be divided by the total asset, which is 3,500,000. So the answer of, or the quotient of this will be multiplied by 3.3, and the answer it will be letter C. So next is for letter D. For letter D, market value of equity will be divided by the total liabilities. So our market value of equity is 7 million over by the liability, which is 5 million. The quotient of this will be multiplied by 0.6, and the answer will be letter D. And for the last is letter E. So letter E is sales over total assets. So the sales is 8,300,000 divided by the 3,500,000, which is the total asset. So the quotient of this will be multiplied by 0.999, and the answer will be letter E. So when you total the answer of this, you will get the Altman z-score of 11.09 or 11.1. Stop. So before we proceed to our example in Altman z-score for manufacturing companies, the uses of Altman z-score is to predict the chances or the possibilities of a company that leads to bankruptcy. So in example problem, Belta manufacturers in China produce car engines that they have been in business for almost 20 years. They have been profitable enough to employ more staff and increase their production but with a recent loan to take facility automation, investors want to know how the company is doing. So their total assets are worth $3,500,000 while they have a working capital of $4,200,000. Their liabilities stand at $5 million while the retained earnings amount to $800. Earnings before interest and tax come to $6,500,000. Sales totals to $8,300,000, while the market value of equity is $7 million. So using the formula in the Altman z-score of manufacturing companies, we will use the ABCDE formula in getting the Altman z-score. So first is 1.2 times A. So we know that A is equals to working capital over total assets. So the working capital here is 4,200,000 over the total asset, which is 3,500,000. So the answer of the quotient of this will be multiplied by 1.2 for letter A. So next is for letter B. So letter B is retained earnings over total assets. So the retained earnings is amount to 800,000 over the total assets, which is 3,500,000. So the quotient of this will be multiplied by 1.4, so that the answer will be letter B for a while. Next is for letter C. So we know that letter C is earnings before interest and tax. So the earnings before interest and tax is 6,500,000 will be divided by the total asset, which is 3,500,000. So the answer of, or the quotient of this will be multiplied by 3.3, and the answer it will be letter C. So next is for letter D. For letter D, market value of equity will be divided by the total liabilities. So our market value of equity is 7 million over by the liability, which is 5 million. The quotient of this will be multiplied by 0.6 and the answer will be letter D. And for the last is letter E. So letter E is sales over total assets. So the sales is 8,300,000 divided by the 3,500,000, which is the total asset. So the quotient of this will be multiplied by 0.999 and the answer will be letter E. So when you total the answer of this, you will get the Altman Z-score of 11.09 or 11.1. In interpreting this answer, there are three ranges of numbers. The score of 3 and above, the score from 2.8 and 1.2, 1.8, and score of below 1.8. So as you can see, it is 11.097. So it is included here in the score of 3 and above, and this will become a safe zone. So that meaning of safe zone is that the company is not leading to a bankruptcy. So for the next is the Altman Z-score for private companies. So as you can see here, it is also multiplied by A, B, C, D, E, but in different decimals. So the Altman Z-score of private companies is equals to 0.717 times A plus 0.847 times B plus 3.107 times C plus 0.42 times D plus 0.998 times E. So we will use again the formula of A, B, C, D, E, which is this. So for the score interpretation, the score of 3 and above is also safe zone. Score from 2.99 to 1.23 is the gray area. Score of below 1.22 is the red area or distress area that may lead to bankruptcy. So for example, the example of C-score for private companies. Carico is a medium-sized marketing agency. They have been in operation for 2 years. Business has not yet hit their expectation, but things are running smoothly. Wanting to know the outlook of their business, they seek to calculate their Altman Z-score. So, Carico earnings before tax and interest are $650,000. Their revenues or sales are $857, where their total asset amount to $1,200,000, with liabilities being $320,000, and the book value of equity stands at $7 million. Retained earnings are $135,000, and working capital is at $400,000. So using again the formula of A, B, C, D, E, 0.17 times A or 0.17 times the total times the working capital over total asset. So our working capital here is $400,000 over the total asset of $1,200,000. That's for letter A. So for letter B, 0.847 times the retained earnings of $135,000 over the total assets of $1,200,000. So next is for letter C. So letter C is the earning before interest and tax. So it is amount as $650,000 over the total assets of $1,200,000 plus the letter D, which is 0.42 times the $7 million over the $320 or the market value or the book value of equity of $7 million divided by the liabilities of $320,000. So that's for letter D. For the last letter E, 0.998 times the sales over the total assets. the sales is $857,000 divided by the total assets of $1,200,000. So the answer will be 11.917 or 11.92. So when we interpret the score, it is score of 3 and above. So it is included here in the safe zone. The last topic, which is the using financial ratios to assess performance. First is the comparison to industry average. In this, they are useful for comparing companies' financial performance against historical performance and industry average, because if you compare your company's ratios against the industry average, there is no need to panic if the ratio does not match up exactly with other companies or with other industries, but it digs a little deeper if there are wide variation. So, in example, to comparison to industry average, for example, the net profit margin of industry average is higher than yours, then don't settle for less and don't look for the negative vibes, because you can look for the room of improvement to your cost structure. So for the last is the trend analysis. Trend analysis is a technique used in technical analysis that attempts to predict the future stock price movements based on recently observed trend data. In trend analysis, it is an analysis of firms' financial ratio over time. It is used to estimate the likelihood of improvements of deterioration in its financial condition. So it is important to know and to analyze the trends in ratios as well as the absolute levels for trends, because it gives clues as well. It gives clues to the firms whether the financial condition is likely to improve or deteriorate. So, in conclusion, uses and limitations of ratios are useful for each company or each firms to find its strengths and weaknesses. In addition, the Dupont equation allows analysts to dissect a company, efficiently determine where the company is strong, weak, and quickly know what areas of the business to look for. Next is the Altman Z-score. This technique is to help determine the financial health of a company. In particular, it is a probabilistic model to screen for bankruptcy risk. Lastly is the using financial ratios to assess performance, wherein this is to help evaluate the financial statements.